Is Northwestern Mutual whole life insurance a good investment or not? That's what I'm going to address in this video. Like, how do we know it's a good investment? Is it some place that's good for you to be able to have your money? Well, guess what? The answer might surprise you, and that's what we're going to talk about today. All right, so you're probably wondering, is Northwestern Insurance whole life insurance a good investment or is it not? One, just so you know, whole life insurance is not an investment. But then two, Northwestern Mutual is one of the biggest companies out there, a very strong, solid company, got a great track record. And many people will say, I've met that agent, I've saw them at a networking event, because just so you know, almost every new person in the insurance world goes to Northwestern Mutual or New York Life, something like that, right? Some big company like that. And you're wondering, is this the best thing for me or not? Well, I'm going to expose some things here that might surprise you. So be sure to check this out. Okay, so first and foremost, like, what is whole life insurance? Like I mentioned, it's not an investment. So just so you know, whole life insurance is never an investment. It's actually illegal for me to even say it that. But whole life insurance is, like it says, it's a life insurance policy that covers you your whole life. Versus term life insurance, which is what most people have. Term life insurance is more of it covers you for a certain period of time. You might have it through work, at least until you stop working there, then they discontinue their service for you, but it only covers you. It's just death insurance, right? If you die, then you get that death benefit. Even if you got like a 10-year, 15, 30-year life insurance, whatever it might be, that term life insurance only covers your death. Whole life insurance is a little bit different because it does have that death benefit, but it also has a living benefit called cash value. Cash value is this tax-free savings account, and it can actually be a tax-free high-yield savings account that you have. You're able to keep your money and grow it guaranteed. Many of these companies will have at least a 2, 3, 4% guarantee on that money that's earning in there. And some of these companies have been paying you dividends for many, many, many years. Northwestern Mutual is no exception. Northwestern Mutual is one of those biggest companies that are out there. It's been paying dividends for many, many years. It has a great track record that way. Most of the mutual companies, just so you know, mutual companies are a great kind of insurance company to go for. So when you hear mutual in the name, and sometimes they don't always have the mutual in their name, but mutual life insurance companies usually pay you better dividends than the stock-based companies like your State Farms or MetLife, right? Those companies won't so much pay you as good returns as those mutual companies will. And Northwestern Mutual, of course, is one of those biggest companies you'll ever find out there. If you ever want to know if a company is strong or solid, go Google Comdex. You can actually look up the Comdex score for insurance companies. You'll see Northwestern Mutual is right up there at the top with like New York Life and Guardian, and a lot of the companies we write with usually are at least in the 90s or up around 100. You know, like even Penn Mutual, and you've got, you know, Lafayette and all these kind of companies out there too, right? Mass Mutual is another popular one as well. But Northwestern, you'll see, is right there at the top of that list. Why? And what does that really mean? Well, does that mean the company is good for you? Well, it does mean the company is solid. At least we assume it is. At least what they're reporting is solid. It does mean that they usually have a good amount of cash reserves. They've got a lot of things in place, you know, a lot of assets under management and things like that to ensure that they can keep paying on their policies. So Northwestern is a strong, solid company. Now, here's the other side of that too. One of the reasons why Northwestern Mutual is also a very solid company, from my experience, has been because their insurance costs are higher than most other companies. They actually are more expensive. So yes, why is a company more profitable to get that higher Comdex score? Because they charge you more money for that same death benefit. And that's fine. No, I'm not saying that's a bad thing, and I'm not saying that it's not a safer company to be with than some of those other companies out there that might be more obscure. That's not what I'm saying at all. If there's much, much worse things you could be doing that could be putting your money at risk. Just so you know though, insurance companies are required to have not just reserves, but these insurance companies are also required to have what's called reinsurance. If anything bad ever happens, so even Northwestern Mutual, if they even happen to go under, just so you know, there are other big insurance companies out there, global insurance companies, that will cover the losses that happen in those companies. The main reason they're willing to do that is because it happens so rarely anyways. Very, very rare. Banks go out of business way more often than insurance companies do because banks take bigger risks. Insurance companies take less risk with their money. And as a result, they get these reinsurance companies that will cover your cash that's in there and your death benefit. So even if that company fails, your policy still stays in place, either with that company or until another company buys up your policy and is able to get it under a new umbrella. One thing I've noticed also with Northwestern Mutual is that every single time when someone tells me, hey Chris, I'm looking at Northwestern, or Chris, I'm looking, you know, I actually have a Northwestern Mutual policy. Does this work for this max ROI infinite banking strategy? And my answer is usually probably not. I mean, now yes, can you use it? One problem I've seen with Northwestern Mutual is that they often will charge you more for their loans. So a lot of people don't want to use their loans because of the higher rates. Secondly, the big problem is, of course, it's not just about what they might promise you. Sometimes their dividends can vary a little bit. They're not, again, like I said, they still always pay dividends, but it's not always consistent. It can go up or down each year, and they always project based on whatever it is. So sometimes if they're on an up year, where they show like maybe they'll pay you, 6.5% or 7% that year, and you're like, oh, look at the projections on 6.5%, 7%, it looks great. But then the next year goes down to 4%, and you're like, ooh, that looks miserable. It gets people in, it gets a lot of sales, but then those people are like, wait a minute, what did I just buy here? Is this really as good as I thought it was? So that's one thing that keeps me from wanting to write Northwestern Mutual myself. And I am a licensed insurance agent for almost 23 years. Independently brokered, I can write with anybody, including Northwestern Mutual. The reason I don't personally use Northwestern Mutual is because they're just not competitive enough. I couldn't find any reason to want to do them because the truth is there's so many better insurance companies out there than them. Now they may not always be bigger than Northwestern Mutual because Northwestern Mutual focuses a lot on building a lot of profit, right? They're charging more on insurance costs than these other companies will. So when someone comes to me saying, I've got a Northwestern Mutual policy, often my response is, I may or may not verbally say this, is, okay, this is probably a piece of crap. Because here's the two things you got to look out for. It's not just the company, it's also the insurance agent. And sometimes the insurance agents are only trained by the companies. So I've seen varying differences of life insurance companies or policies, even from Northwestern Mutual. And just so you know, even if somebody writes with the companies like I write with, they may not do the best job for people because they'll still not know how to do it the best way for the client. So I'll give you an example with Northwestern Mutual. I remember seeing a policy that was sent to me, and I kid you not, this person was supposed to put in $10,000 a year, and it wasn't until year 39 after they put this in. Now, still, of course, they get the death benefit, but it wasn't until year 39. So they paid $390,000 before they finally had in that tax-free savings account $390,000. Just so you're aware, a normal whole life insurance policy, even the ones I criticize usually, the normal, typical whole life insurance policy usually takes about 15 to 17 years or so to hit that break-even point where whatever you paid is what you have in cash too. This took 39 years, the worst I've ever seen. I don't even know how they did it that way. I don't know how you can make it that bad, but this insurance agent did. Needless to say, we didn't have it anymore, or the client didn't want to keep it anymore because it was just so dang expensive, I had another situation, actually, another client recently, just in the last year. He came to me and says, I have this Northwestern Mutual policy that was sent to me. What are your thoughts? And he showed it to me. He's shown to put in $22,000 a year. And by the way, if you ever want to know, like, how do I know if I have a good policy or not? Ask to do an apples to apples comparison. This is something that we actually challenge even our own clients to do, saying, hey, listen, if you ever doubt, just do an apples to apples comparison. Like, have them do a comparison to compare to our numbers. And heck, we'll compare our numbers to theirs and putting in the same exact premium each year and see who comes out better. Now, some people might say, well, it's not about the cash value. I'm sorry to say, for most of our clients, they want to have more of this tax-free savings account that they can then use to invest, use in other places, that they're liquid, they can access any time, money they can use to invest and make money in two places at once. So if you do that whole max ROI strategy like we teach the correct way, you can actually make money in two places at once. You can actually make bigger investment returns than you can just throwing your money in the stock market or even throwing it in real estate. You can actually make money in real estate and in the policy at the same time and have some tax-free benefits too. And so I teach them this stuff. I'm like, well, let's do an apples to apples comparison. So as we looked at this with this particular client, we looked at it, he's putting $22,000 a year. After 10 years of putting in $22,000 into that policy, this is $220,000 he's paid, he had $192,000. So he was still $28,000 less than what he paid into it. With our policy, he had $70,000 more. He put in $220,000, he had $262,000 by that 10th year. Same money going in, but the difference is that we were able to reduce the insurance costs. It doesn't matter what they claim. They might say they're the biggest company in the world. By the way, whenever I talk to Northwestern Mutual insurance agents, and even when they argue because their clients are leaving them to work with us, they'll say, well, we're the biggest company out there. We're big. Who cares if you're big? I care about, can I get my clients more money in their pockets? That's what really matters, right? And it protects their family at the same time. So if we can make it cheaper and protect their family too, how's that not a good thing? But we're bigger. No one gives a crap about your bigness. We're not measuring our insurance companies here, just saying, okay? Nobody cares about that. The clients really care about the measurement is, what does it do for me? That's how you should be focusing on it too. So yeah, that was a $70,000 difference in just 10 years. Imagine that, $70,000 difference. That means like they're saving themselves on average $7,000 a year for the $22,000 they're putting in. Why would you want to pay more? Even other companies too, we've seen the same thing where there's a guy that's big on YouTube that does infinite banking stuff, talks about becoming your own banker. He did a great job for one of my friends because that guy put in a couple $1,000,000. However, when he sent his younger brother in, he didn't do such a good job. And that brother thought he was going to get an awesome deal. We told him, like, listen, you're only putting in $10,000 a year. You're still overpaying $1,000 a year. You should have $1,000 more each and every year doing it this way instead. He didn't believe us until we showed it to him. And he's like, why I got this thing? Pfft, screw that. I'm not doing that anymore. I'm going over here. And so just be aware that, again, Northwestern Mutual, if you're talking about being a good investment, even though it's not an investment, it's whole life insurance. If you want to know if it's a good investment, the question is, where are my dollars going? Are they coming back to me? Or are they just going to the insurance company? Because if that's the case, this is my personal opinion, I don't want that. This is why we even brought it in-house. This is why, of course, you can go to moneyripples.com if you want to know more or ask questions about this. Go to moneyripples.com. We have a whole IBC playlist that you can check out there. All these things you can look up about how to design these better. Well, I design these just the same way I design my own policies because I want more cash and I want to protect my family. I want the ability to have that money that's protected from lawsuits and creditors that I can now have protected so I can access it. Money that I can use to invest if I want to invest it. Money that can sit there as cash reserves and make more than 0.nothing% than at the bank. That's what I like to do. Now, if you're just wanting a death benefit and you don't care about having money at the end, Northwestern Mutual can be a great fit and they're a strong, solid company. But the question is why not shop around? You probably do it for everything else in life. Why not look for other answers? That's something you can actually do. Go to moneyripples.com, check out that IBC playlist, and see if there's a way we can help you today.